Welcome. Back again, once again, time and time again, my friends, until the end. And I want to start this video off with this question. Why did I make this YouTube channel? Well, as you know, this is a trading channel, but specifically, I did not make this channel for any audience in particular. I made it for myself. I've been going through the trade signals that I've sent out since I've been sending signals and just using this as a virtual place for me to have what you would call a trading journal. So I can go back and look at the trades that I've taken if I'm ever in a rough patch to get myself back on track, or to go back and track trades and statistics, or just to do multitude of things that will benefit a trader in his trading journey. So I just wanted to say that and put that out there. You should have a trading journal as well. I have the signals chat, which is written form, so I can go back and see, but I also have this YouTube channel, which is adding a little video aspect just for me, just because I want to be able to actually visually see or show someone the trades that I was taking real quick, and being able to explain it without showing them just a picture and then trying to explain them going to Telegram or going to TradingView or any other place like that. I could just really show them like this, or myself. So I just wanted to throw that out there. You should have a trading journal, and this is my trading journal. So this is what this channel really is. Let's continue with what we've been doing, and that's going through these trades for some valuable information, providing some trade breakdowns. So where did we leave off? We left off on Euro AUD in the last video. And like I said in the last video, if you wanted to see some losses, let me know. And I think you wanted to see me lose. So instead of just going through the winners, which I'm not hiding the losers, we just don't lose a lot over here. So but Euro AUD, there you see, started running 70 pips, and we went through it in the last video. What did we have next? USD Mexican peso, the sell limit. It was a higher risk trade, but towards the end of the day, it did not look appetizing for our strategy, for the strategies that I used. I ended up removing the order. Moving on to the next day, this was the watch list. We had Euro AUD on this Friday. This was Friday. We had been running the Euro AUD trade. What did I say? It is Friday. We've been running it all week. It will probably hit take profit next week, but let's bank profits for the week. So let's go ahead and get 2.5 R's. No sense in wasting or leaving 2.5 R on the table to try to get a half of 1 R. Went ahead and banked that out, and as you see in the last video, I think it ended up coming back to the break-even point the following week. That was good on us. We ended up having a quick Zoom session, just to get everybody back on page, and then we came back with Euro JPY, looking for a sale on that. It was a higher risk as well, so I said it is a little higher risk. Do not try to get rich off of one trade. Nothing is guaranteed, and that is facts. You can't put all your eggs in one basket. Even if the setup is looking perfect, it's not guaranteed that it's going to play out. But in the end, we ended up removing the order. I think it ended up breaking down, not coming back for our entry, and creating some structure, doing something weird. So just not really any trades taken over the last maybe week and a half, 2 weeks. We've just been chilling, which is part of the game. This is where the patience kicks in. You need to be able to be patient if your setups aren't coming to you. You can't just force setups. The market will kick your butt every single time. Let's keep moving. What did I say? I will be taking the rest of the week off. I'm working on a project. I will resume next week. So yeah, this is why I'm doing the video portion of it, because I can go back and remember that I was working on the FX SAVANT University. Link in the description. It will probably be the first pinned comment as well right here. So I took that week off to go ahead and work on the program, which I think is really nice. What do we have? So we came back following week, NZD CAD on the watch list. So let's go. That's today's trade. That's what we're going to go over. We had NZD CAD, and we had a buy limit. NZD CAD at this level, stop loss down below, take profit up above, looking for a buy. Let's hop to the charts. What do we see? We're going to still continue with this series as well. So how can we use the daily time frame to find the best setups for us to trade? So using the daily time frame, if you had to use one time frame to go ahead and analyze the chart to find good setups, I would recommend it being the daily time frame. And that's just if you had to use one. Of course, I always advocate for a multi-time frame analysis, using all the time frames that you will be using, all the way from the monthly down to your entry time frame. So, but if we're just going to use one, the daily. And what do we have from NZD CAD on the daily so far right here. Well, what do I teach is that we have a clear break of structure to the upside and the market is coming back for a retracement. It's a correction and exhaustion, some sort of misdirection in order to grab some liquidity to make a higher high or a next move up, which is the most common pattern in the market. It happens over and over and over on all time frames, more times than not. So that is what we were looking for, and that is how we were going to go about this trade. So since we had the impulse, we had the retracement, let's go ahead and pull out our fibs and see where we had the retracement back down to see how perfect this trade really was, this setup really was. Yeah, we had a nice 50% touch, came down in here into the 50% 618 golden zone, got rejected perfectly. So, you know, everything's stacking up. We got a bunch of confluences in the market stacking up and lining up in our favor. We have the most common pattern in the market that plays out more times than not. We have the market coming back to the 50% 618 retracement area and then showing signs of the next impulse starting. It shows signs that the retracement is over and the next impulse wants to start right at that area, which is perfect. We do have some structure in this area as well that could be perceived as that could be used as previous structure resistance, now turned support, now acting as support to go ahead and push the market up higher. So we have a lot of confluences stacking up, and that's just from the daily time frame. Now we drop down on the 4-hour time frame. What can we identify? Well, after we had our daily impulse to the upside, we had a series of lower lows and lower highs created on the 4-hour. And you know what I'm gonna say next is we can't be looking for a buy if we're making lower lows and lower highs. That's not conducive to the market structure that we want to see. If we want to buy, we want to see the market making higher highs and higher lows before we get in on a buy. And then what happens as we start to make our way down, we come down and we find an area where we no longer start to create lower lows. Matter of fact, we start to consolidate sideways movement, which we can go ahead and understand is a shift in direction. So it's the big market players. It's not the little market players, but it's the big market players, a little indecisive at this area. So they did not want to continue pushing price down in this area anymore. So it consolidated a little bit back and forth until they made their decision, collected some orders and got enough price liquidity to go ahead and push this market to the upside. We broke some levels of structure on the 4-hour. We're starting to make higher highs and we want to see what would be a higher low, which is conducive for us to go ahead and enter in on this trade because we have the daily time frame that's pointing in an upwards direction. It's showing bullishness signs. We want to wait until our 4-hour, our entry time frame, is also showing a bullish market structure as well. So we're creating higher highs and we broke a level of structure with a strong bullish candle. So everything's really lining up for us to see this trade and move to the upside. So what do? Look for a place to enter. I like to enter on previous structure resistance that should now act as support. Put my stop loss down below some structure. That way it's protected. If my stop loss does get hit, I no longer want to be in the trade anyway. So I put my stop loss at a safe place that won't get taken out before I do actually see the move to the upside that I really want to see. And then I go ahead and put my take profit for a higher high to be created because I'm expecting the market to make a higher high. If we're following the most common pattern in the market is an impulse, an exhaustion, and another impulse to the upside, making a higher high, because that's the only way the market can move. It either makes higher highs to move to the upside or lower lows and lower highs to move to the downside. So everything's really lining up. There's nothing really left to do but let the trade play out. So what happens? The market starts to retrace a little bit, comes back down, and this is the moment in which we put, I didn't mean to go back. Let me go back. So there's nothing really to do. Let the market play out and let's let it play out. So the market starts to retrace. We get a bearish candle. So the retracement may look to start right now. Let's see if it gives us some exhaustion. The market comes down, hits our entry. We're not entered in yet, but after that candle was printed is when we were looking to enter into this market. So now it's the time where our order was entered into the market. The next candle does not trigger us in. One more candle, we do get triggered in on this candle. So now we're triggered into this market. Let's see what happens. The market rejects this area pretty nicely. Perfect. Previous structure resistance, now turn support. Let's go ahead and let's see what happens. End up hitting our stop loss. Boo. I'm a horrible trader. I suck. We lost. This trade didn't play out. Oh, I don't want to trade the FX SAVANT style. That's crazy. Why would I do that? You lost the trade. It happens. If we do take a look right here, we had a previous win as well. So this one hit for 3R. Market came, actually almost stopped us out, but did not, miss the stop loss and then shot straight to take profit for 3R. And then this next trade, we lose. Even though we're looking for 3.5 0.05R on this take profit to be met, it ended up hitting the stop loss. So we're still only risking 1, regardless of what the take profit is, which we shoot for a 2 or greater. We're only risking 1%. 1% is equivalent to 1R for me. So 1R, I'm losing 1%. If I made 3% over here and I lost this 1, I'm still up 2%. Don't worry about the losses. That's really much it. You must accept the losses, honestly, because here's the thing. If you have a strategy that you lose more than you win, or you're not profitable with that strategy, you need to find a new strategy. But here's the caveat to that. You need to actually trade that strategy and understand it, because you don't want to fall into the cycle of doom, is what it's called, where traders find a strategy, it works a little bit, they go trade it, it doesn't work, or it works for a little bit, then it stops working, and then they give it up, go look for a new strategy, trade it for a little bit, it works for a little while, then it stops working, and then they give it up, then they give it up, and then they go look for a new strategy and do the same thing over and over and over and over, and never find profitability or a style that actually suits them or a way to trade, and they end up leaving trading altogether. You must accept the losses. You can't run from them. They're gonna happen. I got 4 points. Number 1 is you must accept the losses. The next one is don't think you have to make that back the same day. So if you lose a trade, don't think you have to make that trade or that loss back in the same day to get back to break even. You don't have to end the day break even or positive. A lot of traders will lose a trade one day, accept the loss, move on to the next day, and win a trade. Now they're up. Say they risked 1% to make 2. They win. Now they're up 1% on the whole week just because they didn't chase the loss immediately after they lost. It gives them a clear mind, clear perspective of the market. You can take the step back, see how the market plays out for the day, and really analyze your trade for the next day. I would say don't try to recover your losses the same day, because you're going to fall into a spiral of losing a trade, needing to try to make that money back to get back to break even, taking a trade that's outside of your rules that you really wouldn't take if you had a clear mind, and then that trade's going to end up losing. So now you're down 2 losses on the day when you could have been down 1, and that's going to mess with your mental even more. So you're going to want to make back at least 1% now that you're down 2%, or you're going to try to make back the whole 2% that you're down and end up losing again and again and again until you blow the whole account, or you put yourself in a situation to where you can't trade. So say you're taking one of these challenges, you lose a trade, you don't try to make it back the same day, and then end up losing 4% in one day to where you can't take the trade that is actually fitting your rules and goes on to hit take profit, and you weren't a part of it because you took too many losses in one day. Next, limit the trades you take in a day. So you should have a set amount of trades that you are going to max out in a day. For me, that's anywhere from about 3 to 4 trades. And if I'm taking 3 to 4 trades, probably 2 of those trades are going to be swing trades, to where they're going to play out over a period of time, and I'm not constantly worrying about, are these 4 trades all negative right now? Does it have a chance for them to hit the stop loss in one day? I'm more than likely going to give it some time to play out, and I might take 2 day trades. So I might take 2 swing trades in a day and 2 day trades, but those swing trades are going to last me 2-3 days, to where I won't be taking any swing trades for probably the rest of the week. The day trades, of course, I can find a trade almost every single day, twice a day on all the pairs that we use, but I limit myself. And even with day trades, I try to take the best one that I can find. If I find a really good setup, I may have multiple pairs on the watch list that I'm looking to take a trade on. I'll look for the best one, providing at that moment that I'm looking to take a trade, I'll take that trade, win or lose. But then I'll analyze the rest of the trades. If any of the other ones are really worth me putting my money on the line again, say I win the first trade, and if I see another trade that looks good, but there may be a few confluences that are missing in my strategy that I don't necessarily need, but I would like to have, I may not take the trade. It may not be worth me losing some of the profits that I made for that day. And then vice versa, say I lose the first trade of the day, I may look for a trade on the rest of the pairs that are on the watch list, and if one is providing a really good setup, I may go ahead and take that. But if I lose that second trade, normally I'll cap myself for the rest of the day. I'll wait, because there's always going to be another trade. There will always be another opportunity. And piggybacking off the previous point is you don't want to fill up your account with too many losses in too close of a time span. That's going to hinder you not only mentally to take the next trade, because you won't think it will be a winner. You've been losing so much, and then as well it may jam up your capital to where you're not able to actually take the next trade, which is setting up perfectly. So I would say limit the amount of trades that you take, not just the amount of losses that you would take. So win or lose, even though you may be missing out on trades, it's more important to go ahead and close some profits on the day. And then the last but not least, the fourth thing of this list is everybody loses. So when you lose, you're not alone. Everybody loses. Your favorite trader loses, myself included. We all take losses. Some people don't post them. I'm obviously showing mine right here, but everybody loses. And then we can play it forward. And just you know, I mean, everybody loses. So don't feel like you're the only one losing, or you suck, or you're bad if you take a loss. It shouldn't be 10 losses in a row, but everybody loses, man. So if we just look at the market right here, say we won this trade, which we did, won this trade and lost this trade, that's a 50% win rate, but I'm profitable. A lot of traders have about a 50% win rate, but their risk to reward is greater than what they're risking. So when they do win, they win more than they lose. So your winners cover your losses. But just for instance, say this is a 50% strategy that we have. We know we have a 50% chance of the next trade being a winner or a loser. And if we lose, we've already won a 3R trade. So if we lose, we'll still be in profit 1R. And if we win, it will be either a 2 or greater risk to reward. So let's say at the most, just to be conservative, at the least we'll be up 4R just in 3 trades with a 50% win rate strategy, which ours is greater because obviously, let's play it forward, zoom out to the daily. Just taking the next following trade that happened, and this is on NZD CAD. So we trade all pairs on all time frames, and this is just one pair. So just imagine. So we took the loss down here, took a win, took a loss, up 2R, and then what happens? We take another 2R win on NZD CAD. So now we're up 4R in 3 trades. So that 50% win rate ended up being a 66.7% win rate strategy. And this is just from not looking for another trade immediately. All this in here is perfect for my strategy for me to capitalize on. But I didn't. I was patient, and there was probably better opportunities on other pairs. So everybody loses. Deal with it, accept it, understand why you lost. It should be an explanation as to why you lost. It should be in your strategy. But just remember that everybody loses, man. But yeah, I wanted to make this quick little video showcasing the losses. If you want to see the rest of them, because I'm telling you, I remember this time period very vividly, very, very vividly. NZD CAD ended up hitting stop loss for minus 33 pips, minus 1R. So I remember it was coming up. The beginning of August was not the greatest trading that I had. Actually, I think it lasted for a while, so maybe about like a month or two. It was just rough. If you wanna see me go through this, let me know down in the comments section below. But if you want me to skip over this and get to the dubs, I can do that as well. But I got plenty of trades, man. We're gonna be doing this for a while. Hopefully you like this and gain some valuable education from this. So even if you just learned that I lose as well, please drop me a thumbs up. It'd be very much appreciated. But until next time,